This chart shows the stock price of Ola Electric over a 5-day trading window. Right here, the line jumps an aggressive 33%. Before we get into the details, a quick note. This is a breakdown of business operations and strategy, not financial advice. Always do your own research. Shortly after its IPO, Ola commanded a massive 30 to 35% of the Indian electric two-wheeler market. When a company captures that much of the market that quickly, investors price in near-perfect execution. So when the internal execution fractured, the market reaction was severe. By 2025, operations began to buckle. Service centers couldn't keep up with the sheer volume of incoming repairs, leaving a backlog of nearly 20,000 scooters. This chart tracks year-over-year deliveries. The previous year, Ola delivered 84,000 units, but in Q3, that number collapsed to just 32,000. With fewer vehicles making it out the door, Ola's total share of the market shrank to under 6%. They dropped to 5th place in the national rankings. Competitors like TVS, Bajaj, and Ather quickly stepped in to absorb the frustrated customer base. Consequently, Ola's stock price hit a record low of 22 rupees and 25 paise. By the start of 2026, the data looked terminal. Investors were no longer projecting future growth, they were bracing for insolvency. Then, the data sharply reversed. This graph tracks monthly vehicle registrations. After months of decline, the numbers suddenly shot up 150% in March, crossing the 10,000 unit mark. The first major internal fix was overhauling their service network. They upgraded centers, secured better parts availability, and pushed their same-day servicing rate past 80%, cutting deep into that massive backlog. Management cut operating expenses aggressively. They scaled back physical stores, reduced headcount by 5%, and brought their quarterly operating expenses down from 840 crore rupees to 484 crore. These operational cuts stopped the immediate bleeding. The company stabilized its cash flow just enough to execute a major shift in its engineering pipeline. Ola launched the S1X Plus with a larger 5.2 kilowatt-hour battery for 1.29 lakh rupees. This pricing was designed to aggressively pull mass-market buyers. This contrasts their older 4680 NMC cell with their new indigenously designed 46100 LFP cell. LFP has lower energy density, requiring heavier cells and slightly less performance. The upside is durability and economics. LFP runs cooler, endures more charge cycles, and costs much less. By accepting slightly lower performance, Ola gained a highly durable battery system that is vastly cheaper to manufacture at scale. The unit economics finally started to align. Yet, the 33% stock rally doesn't tell the whole story. The underlying financial structure of the company remains incredibly rigid. This diagram shows how the company spends its money. Between 85 and 90% of Ola's operating expenses are fixed costs. Only 10 to 15% fluctuate with production. When sales are high, profits scale quickly. But if customer demand dips even slightly, those fixed expenses don't disappear. The losses compound rapidly, leaving very few levers left to cut costs. The recent surge in registrations provided a crucial influx of revenue, but it didn't eliminate the structural risk. It just covered it up temporarily. As of the last earnings report, the company's EBITDA margin was still negative 68.7%. They are taking heavy losses on core operations. Management has also repeatedly adjusted their own survival metrics. At the start of the year, their target to break even was 50,000 units. That was revised down to 25,000 and recently lowered again to just 15,000 units. Because of these moving targets, the actual health of the company won't be proven by a 5-day stock rally. The real indicator will be whether they can sustain this sales volume in their fourth quarter results. As a reminder, this breakdown analyzes corporate strategy. It is not financial advice. The March recovery demonstrates aggressive crisis management, but with high fixed costs and a history of changing expectations, Ola's long-term viability remains a complex equation.